So what are the 5 objectives of having an effective tax structure? Well, the first thing I look at is making sure you've got the asset protection in place. The minimising of tax, the structure itself can help reduce your tax. Also, some structures allow you for capital gains, exemptions and CGT concessions. You want it to be easy and flexible to use. And another point, estate planning and succession planning. Basically, a lot of people don't know that we do have a death tax, inheritance tax. The government doesn't actually announce it or talk about too much, but when you do die, there are inheritance taxes, and having the proper structure can minimise that. Preservation of your wealth. So what do we look at? Moving your assets from the risk-free entities. So if you're in a risk category, if your husband and wife running a company, if the husband is the risk taker, he's the person running the business effectively, mate, get the wife off the directorship, because if something happens, she's liable also. So try not to become a director as much as possible. So move the directorship to the risk person and build the assets in the person who's in the least risk category. Section 122, the Bankruptcy Act. There are new rules now. If you transfer assets under market value, so let's say property's worth $500,000. I know someone's going to sue me. I'll transfer it to a trust for $350,000. They can reverse that up to a period of 5 years. So they're what they call back provisions. Again, build assets in trust and super funds. Quite a good asset protection area. And do it when there's no creditors chasing you. Remember we talked about Cummings, the QC, the barrister? Although he had no one chasing him at the time, but he knew that he hadn't lodged the tax returns and he was going to be subject to a massive tax liability. And set up as many protective firewalls as possible. So what makes a good structure? First of all, you want it to be flexible. So if you want to add additional partners to your business, be able to allocate shares or put in more structures in place. So you're minimising all the costs associated with it. Obviously, it's got to provide good asset protection. Number 3, you want to try and minimise the costs associated with tax and capital gains tax, and allows for efficient distribution of profits. In other words, distributing income to low income beneficiaries. So the most common structures are the four top structures: sole traders, partnership, trust, discretionary unit and hybrid trust. But I added self-managed super funds because I think they're a really good vehicle. I think they're an appropriate vehicle because one, they're in this. If you got money in a super fund, a creditor can't attack that. So that's one good thing, and let alone all the capital gains and tax benefits.